We welcome you to our classes. Today's subject is transactions. It is a complete exercise starting from prime entry right up to the balance sheet. In order to facilitate our classes, we have divided our slides into three sections, namely transaction, prime entry, second entry or the posting. Yellow highlighting refers to the current transaction, the present transaction. Let's move on to the transaction. The first one, David started a business with a capital of 100,000. So this is cash received. Therefore, the book chosen is cash book. Cash account debit 100,000. Capital account credit 100,000. If you would notice, in the cash book against the transaction, the word capital is written. In the ledger account, under capital, cash is written. These are the real description which need to be entered, referring to the corresponding entry where it is. Next one is acquired 8 watches at the rate of 3,000 each. So that is 24,000. These are for resale, therefore it will go under purchases, cash account credit, purchases account debit. Next transaction is 2 watches were sold at 5,000 each. So therefore it is 10,000 cash received, therefore cash book debit, sales account credit. The next transaction, rent paid for 12 months 30,000. Cash is going out, therefore cash account credit, rent account debit. The next transaction is a watch sold to Adam for 6,000. This, since the name of a customer is mentioned, this cannot be a cash transaction. Therefore, cash book cannot be chosen for this entry. Therefore, we have chosen journal entry book. Note the way the journal entry is made. Adam, debtor 6,000 to sales 6,000. Here, if you see, to sales have been entered slightly inside. This is how journal entries are made. The posting, of course, to both accounts. So sales account credit 6,000, Adam's account debit 6,000. Next transaction is paid to staff 1,500 as salary. So cash is going out, therefore cash account credit, salary account debit. Next one, sold 2 watches at 6,000 each to Mr. Brown. Since the name is mentioned, it is understood this is a credit sales. Therefore, cash book cannot be used. Journal entry book have been used. Brown, debtor 12,000 rupees to sales 12,000. It is posted accordingly. The next one, sold a watch for 5,000. Since no names are mentioned, it has to be a cash transaction. Therefore, cash debit 5,000 and sales account credit 5,000. Next one, paid for stationery 1,600. Since cash is going out, cash account credit 1,600, stationery account debit 1,600. Paid son school fee 3,000. According to the business entity concept, this is not a business transaction. This is a personal transaction. Owner is different from business transaction. Therefore, instead of posting this to a school fee account, it is posted to a drawing account of the owner. Cash credit 3,000, drawing account debit 3,000. Next one, purchase 3 watches for 3,500 each from Domex Limited. Since the name is mentioned, it is understood this is a credit purchase. Therefore, it has to be a journal entry, not the cash book. So, purchases account debit 10,500, Domex Limited credit 10,500, and it is posted accordingly. The next transaction is money received from Adam. cash received, therefore cash account debit, Adam's account credit. Next transaction, 60,000 received as a loan from Sam, a friend. So cash is received, therefore 60,000 debit cash account, Sam's loan account credit 60,000. Paid to staff 4,000 as salary. Since cash is going out, cash account is credit, salary account is debit. Next one is purchase furniture for 80,000. Cash is going out, therefore cash account credit, furniture account debit. Paid 600 for stationery, so cash account is credit 600, stationery account debit 600. Next one is paid full amount due to Domex Limited. No amount is mentioned, so you'll have to refer to that particular account which shows 10,500. Therefore, cash credit 10,500, Domex Limited debit 10,500. Next one, two watches were sold to Adam at 6,000 each. Since the name is mentioned, it is understood that this is a credit transaction. Therefore, journal entry is used. Adam's account debit 12,000, sales account credit 12,000. The next one, purchased three more watches from Domex Limited at 3,500 each. Since this is a credit purchases, journal entry is used. Purchases account credit 10,500, Domex Limited debit 10,500. Next one, a watch was sold for 5,000. Since this is a cash transaction, cash account debit, sales account credit. Next one, purchase furniture for 60,000 from Harry Limited. So since this is a credit transaction, journal entry is used. Furniture account debit 60,000, Harry Limited credit 60,000. The next one, received from Brown Limited 10,000. Since it's a cash receipt, cash account is debit, Brown's account is credit. Next one, repaid 15,000 of Sam's loan. So since cash is going out, cash account is credit, Sam's loan account is debit. Next one, gifted a watch to a friend. According to the business entity concept, this is not a business transaction. Therefore, this has to be shown as a drawing. So it is shown as drawing and this is credited to purchases account. This is one way of showing it, but there are several other ways of showing it. If the students at least just remember that, that's enough for the time being. Paid to staff 3,000 as salary. So cash account credit, salary account debit. Next one, two watches were sold for 5,000 each, that is 10,000. Since no debtors' names are mentioned, presumed to be cash transaction. Therefore, cash account debit 10,000, sales account credit 10,000. Paid 5,000 to Domex Limited. Therefore, cash is going out, cash account credit, Domex Limited debit. Paid 400 for stationery, so cash is going out again, so credit cash 400, debit stationery account 400. Next one, received from Adam 6,000. Since it's cash, cash account debit 6,000, Adam's account credit 6,000. Next one, paid electricity 1,000. Cash is going out, therefore cash credit, electricity account debit. That's all the transactions are. The next part of the question is to extract a trial balance. So in order to extract a trial balance, first we will have to balance accounts. The way to balance account, if you note Sam's loan account, first you will have to identify which side, either debit or credit, which is more. In this account, credit is more, therefore you have to total the credit side first. On the other side, it's only 15,000. So the balancing figure is shown as carry forward and brought down. So debit and credit. Next one, Brown's account. Here, the debit side is more, so you have to total that first. And the credit side, there is a difference. So credit and debit. Harry Limited, credit side is more, therefore the entry would be debit and credit with the difference. This is how all the accounts are balanced, including the cash book. As you all know, cash book has a dual role, one as a prime entry book, also as a ledger account. So all ledgers accounts are balanced. Similarly, cash account also balanced in the same way. Now look at the trial balance. Since all entries are made correctly, it has balance. But what you have to specially notice, this is not trial balance prepared for 6 months. This is valid only for a particular moment. That's why we on the heading we say trial balance as at. So it refers to only a particular time. Next, they have given some adjustments. So we will see each one of them. First one, salary payable to staff is 2,000 per month. Since the business in operation for 6 months, it is 6 into 2,000, 12,000. Cash paid was only 8,500. That means 3,500 is still payable. So we pass a journal entry. Salary account 3,500. Accrue expenses 3,500. So we have created a new account called accrued expenses. Amount due from Brown is to be written off. So the outstanding amount there is 2,000. So we write it as bad debts debit 2,000 to Brown's Limited 2,000. And again, if you note, there's a new account called bad debts account is opened here. Next adjustment is stock of stationery 500, which has remained unused, which is to be used in the next period. Therefore, we have debited stock of stationery account and asset account debit, stationery account, expenditure account credit by a journal entry. Here again, a new account called stock of stationery is opened. Next adjustment is about depreciation. First, we will have to calculate the depreciation. Since it is 10% per annum, that means for 12 months. So the actual period that was used, we will have to calculate it. The first one, since it was purchased in April, it was in use for 3 months. So accordingly, it is 2,000. And the second purchase of furniture was 60,000. That was made on 1st May. So it was used only for 2 months. Therefore, that amount is 1,000. Altogether, it's 3,000. Depreciation account debit and provision for depreciation account is credit. So we have passed a journal entry accordingly. Dear students, now we have been asked to prepare another trial balance. So, which is highlighted on the yellow color is the present trial balance. If you see as a comparison, if you look at Brown's account, it shows nil balance. And if you see below cash balance of 31,400, there are 5 new accounts have been created. So please note these differences. These 5 accounts came about because of those adjustments. Next question is to prepare a trading account for the 6 month ending 30th June 2021. So in order to prepare a trading account, we will have to arrive at the stock figure which is calculated here. If you note, we have made a purchases of 14 pieces, 11 have been sold, 1 have been taken as a gift, so remaining only 2. If you see the purchase account, you would know some watches were purchased at the rate of 3,000, some other were purchased at 3,500. Now there is a question on which valuation we will have to show the stock. Since the basis is given here, which is first in, first out, so we will have to arrive at the right valuation. With the first 8 watches were purchased at the rate of 3,000. Since sales was exceeding 8, sales were 11. Therefore, all what we have purchased at first said to have been disposed. So, The valuation for the stock is 3,500. The letter page purchaser. We have to pass a journal entry. Stock in trade debit 7,000, which is an asset account, to trading 7,000. Now you look at the trading account. Sales account is shown, purchases account is shown, stock is shown. So the difference is gross profit. Please note the way we have shown purchases account, which is originally 45,000 minus the drawing, the gift that is given 3,500. Therefore, it is shown as 41,500. Now we are asked to prepare another trial balance after preparing the trading account, which is shown here on the right hand side. If you look at it, sales account nil, purchase account nil, two new accounts, gross profit and stock in trade, has come into being. Next, they wanted us to prepare a profit and loss account for the 6 months. Here an adjustment is necessary since rent have been paid for 12 months. Since the account is only for 6 months, it has to be adjusted. So the adjustment is made here by a journal entry. Prepayment rent 15,000, rent account credit 15,000, thereby reducing the rent amount. Now look at the profit and loss account, and it ends up with a loss of 9,600. As a next step, they wanted us to prepare another trial balance. It is very good for the student's point of view to see the differences. Now you see stationery account nil, salary account nil, rent account nil, electricity account nil, bad debts nil, depreciation nil, gross profit nil, and two new accounts have come into being. Prepayment of rent 15,000, loss 9,600. Please note all remaining balances are balances needed for the balance sheet. The next part of the question is to prepare a balance sheet, which have been made here. If you note it, all what is shown on the left hand side of the trial balance, the debits are shown here on the right hand side. Whatever is shown as right hand side in the trial balance is shown as in the left hand side. If you note the heading balance sheet asset, it doesn't refer to 6 months because the balance sheet presentation will be relevant only for the moment when it is taken. Non-current assets. As per accounting standard, you will have to show the historical cost of the assets, which is 140,000, which is shown here, and the provisions of depreciation all will have to be shown separately, and the net amount is expected to shown. So it is shown that way. When it comes to current asset, it has to be the most liquid account should be at the bottom. The least liquid account will have to be at the top. That is to say, when you need to use funds, cash can be used immediately, but stock first will have to be converted into a sales, then to a debtor, then only it can be received as a cash. So several steps are there. So that cannot be used immediately as we could use cash. When it comes to current liabilities and capital account, the first liability which is going to be settled should be at the bottom, and the last liability, which is equity, will come onto the top. On that order only we will write it. We request the students to do more and more exercises like this. Therefore, you will get more familiar with the accounting transactions. Dear students, as you all know, these classes have been provided to you by our YouTube channel, SL Account School. Therefore, we kindly request you to subscribe, share, like, and propagate it among all those who are interested. Thank you very much.